are changing fast in the lending market at the moment, so before we start this episode, I want to note it was recorded on the 31st of March. I hope you enjoy it.
Welcome to the Business of Property podcast. I'm Stuart.
I'm Simon.
And I'm Lee.
We're all property people running our own businesses. This podcast is just us chatting, as we often do, about anything and everything property. Now, we are standing on the shifting sands of the COVID-19 outbreak at the moment. And again, those of you with open ears will notice that we've also got an additional name, Lee. So welcome to the podcast, Lee.
Thank you very much.
And Lee, would you like just to introduce yourself very quickly to the audience, just to let them know, kind of what you do for a living, and then we can start our chat.
Yes, so I'm a director of a company called On Point Mortgages. As it says in the title, we arrange mortgages for people. So we're regulated by the FCA, Independent Whole of Market, and we work significantly with property investors. So about 2/3 of our business is working with property investors, and the remaining third is for people buying their own homes who are also property investors because they do need places to live in themselves, in addition to quite often the self-employed first-time buyers, contractors, anybody that needs specialist advice.
Very good. And I'd imagine at this point in time, you're getting a number of calls. So firstly, just want to say thank you on behalf of Simon and myself for joining us. I appreciate it's probably busy times for people like yourselves, with lots of unknowns out there and people wanting to get information. So I guess that would be my sort of first question to you, Lee, is what's the market like for you right now? Are you getting a lot of inquiries, a lot of concerned people calling? What's it like?
It's literally changing hour by hour. There's a new update, or there's some new kind of progress to keep up to date with. Very busy at the minute. We're working a lot with helping clients in terms of their own financial situation, because it's important that you extend that customer care to your clientele. In regards to customers, a big topic of conversation at the minute is mortgage payment holidays.
How are you finding the mortgage companies with that? Are most of them responsive?
There was some very long hold times. I've heard of some people say that hold times have been as long as 12 hours. You always hear horror stories about hold times, don't you? But it's a big change for lenders. If you imagine, they're dealing with this crisis as well. They're trying to work remotely from home where possible. And a lot of especially the high street banks, they've got old legacy systems which are difficult for people to work from home on. And just like every other business, we've heard of lenders who have been furloughing staff, so they're short in that regard. So it was a big shock to lenders. Mortgage payment holidays have always been around. They come as standard as some products. But as you can imagine, that team was probably not quite as busy as it's been over the last few weeks. So taken some time to adjust, but we've heard some good feedback. Lenders like Santander, the response has been really positive. And a lot of the lenders who are best handling this crisis have actually moved to maybe an online application form where people can put their request through online as opposed to staying on hold.
Yeah, I know that Halifax have sent me a few emails and pointed me towards an online form. This is just for my residential mortgage, so it's not buy to let. But yeah, so there are definitely some that are being quite proactive about it.
My personal experience recently, because I know we had a very brief chat last week about surveyors, because I've 3 remortgages going through, all on sort of buy-to-let HMO mortgages. But the thing that's now happened with 2 of those is that they've been paused while the banks, and this is one savings bank / Kent Reliance, have put everything on pause whilst they deal with the number of requests they've got for mortgage holidays. So is that something you're seeing that's quite prevalent at the moment?
Yes, yeah, that was a recent update as of announced yesterday, and they weren't the only lender that has done that. And I think people can be scared when they hear about lenders pulling out. And at this point, it's important to stress that it is temporary while they deal with this situation. And it's logical. What I've seen from lenders so far are logical decisions that have been made. And if you look at the situation where they can't carry out surveys anyway, lenders can carry out automated online surveys in certain circumstances, but not all. So if you can't actually progress a new application to survey, and you have this stack of existing customers who require your assistance, it makes sense to focus your energies on those customers.
Yeah, absolutely, and that's kind of how I took it. And fortunately, for my broker as well, he said, look, they're just putting all of these on pause. So although of course it's frustrating, I think given the environment we're in, we kind of just accept what we're given, because there's a lot of more important things to be concerned about. But my immediate reaction was, okay, it's just on pause. We'll just have to get through this backlog. But the other thing you mentioned, there were two things, was because last time we spoke, I think my surveyor went out to a property last week, and we may well need to date stamp this episode and just caveat it. But he went out last week. What's the current situation at the moment, Lee? Are people still allowed to do on-site valuations, or is that no longer allowed?
I haven't come across any surveys that have been physically carried out since lockdown. So I think it's not just about the industry. It's larger than that, isn't it? And with this lockdown, there was some confusion initially, what qualifies as essential and what doesn't. And I think it's pretty clear now that house purchases, house moves should only take place when absolutely essential, because they are considered non-essential at present.
Yeah, and that's absolutely right. And that's the priority is clearly health now. And the second element, though, just I know we were talking just before we started recording. So I think originally it was the highest loan to value now was 60% based on desktop valuations, but I've heard now that that's gone up to 75%. Is this something you've seen?
Yes, every lender in a different situation. So there are certain lenders that can carry out AVMs up to 75%. There are certain lenders whose funders will just not allow that. I've had conversations with lenders about potential solutions around this. I even heard one person talk about drones, the use of drones to visit a property. I don't think the mortgage market is quick enough to get to that point in a couple of weeks. But I think this whole situation is making people reassess the way that they do business, the way that they can be effective. And I think it might open up some interesting conversations in the future about the way that we do things. You can't take a damp reading, but if it came down to it, is there any reason why someone couldn't stream maybe via FaceTime or video the survey around the property? Because how long do surveyors spend in properties? If it's a standard valuation for a lender, 20 minutes maybe. A lot of the work is actually carried out off-site on the laptop, carrying out research on recent sold properties. So it's I think hopefully it makes people consider the best way to go about these matters, and you might even see some more effective changes moving forward as well.
Have you seen any lenders taking innovative approaches to the problems in hand and finding other ways to solve problems?
I think at the minute they've just been so busy setting up remote working, like most businesses. There's questions around furloughing. Then the issue comes up. Actually, we can't carry out any surveys. How do we get around that? I think lenders have explored that, but so far the most immediate solution is AVMs, and then the question is what are we allowed to do in respect of AVMs?
Can you define AVM? Sorry,
It is an automated valuation, so it's carried out online and it's based on data. Again, lenders have been able to carry out an AVM for a while, and
this is the desktop survey.
The desktop survey,
or still desktop valuation. Yeah,
that's it. And typically they're carried out on lower loan to values, where there's little risk for the lender. If it comes back at $250,000 or 200,000, if the loan is 75,000, there's little risk for the lender, but they're rarely carried out on buy-to-let properties. You don't tend to get AVMs carried out on HMOs, service accommodation loans, because multi-units, maybe two flats under one title, just because it's a bit more complicated, there's a bit more to assess. They have to come back with a rental figure as well. So you tend to find them on residential properties or buy-to-lets with lower values.
And unfortunately, you've just described most of my portfolio, because I've got properties, multiple properties on single freeholds, mostly HMO. So that's why it's going to be a challenging time for me. But I like the wider point that you raised, Lee, though. I think for me, what's becoming apparent is that working practices have got to change clearly in this environment, but a lot of them may well remain changed once we come out of this, whenever that happens. I think that's the interesting point for me, just in terms of the remote working. But what's changed for you in terms of the brokering space? I mean, are you still busy residentially or with investors? Has your kind of like daily work life changed a lot?
So going back 2 weeks, inquiry levels dropped by about 75%. That was ahead of the lockdown. In the first week of lockdown, it then doubled from the week before. So there doesn't seem to be any rhyme or reason between it. We're still getting inquiries in. I was speaking to an estate agent the other day, and they were saying, this was just before lockdown, they were saying the period reminded them of around Christmas time when levels drop, but those that are looking to do something in this period, whether it be buy a property or refinance a property, at this moment in time, they're serious in regards to doing it. So you lose a lot of the shoppers, the people that are just inquiring, and those that you're speaking to, if they're prioritizing their mortgage or this purchase during this time, obviously it's something that they're very serious about with all that's going on. So it's changing. We're faced with the big issue that I said at the start, we do a lot of work with property investors. Is, as you can imagine, for clients like yourself, you're in a difficult situation at the minute if you can't get a survey carried out. So we're seeing a few refinances at lower loan to values, people wanting to maybe save some money on their mortgage. Cash flow is so important at present.
So are people actually putting extra capital in in order to achieve that? Or
I haven't seen people putting extra capital in, but I have seen some landlords that have had their portfolios for many years, and they've left properties on higher variable rates because they just haven't got round to looking at them, or it just hasn't felt like a priority. And all of a sudden, the mortgage payment holidays got them thinking about cash flow. Maybe a tenant has contacted them about some potential concerns around paying, and they've said, actually, this is the time to get off my variable rate while rates are historically low. So that's something that we've seen, and those inquiries are the most viable in regards to pushing them along at the minute. It's not a purchase, so some solicitors are concerned about exchanging and completing at present, again, because it's not seen as essential, and they're unsure of how long this will last. So a lot of refinances, and we're speaking to a lot of people about protection insurances as well. People often forget that most mortgage brokers are mortgage and protection advisors, and it's just as important to arrange the funding as it is to ensure that mortgage is then protected in the long run as well. So that's something that we've been speaking to clients about a lot.
You mentioned interest rates a little bit there, and of course, quite near the beginning of all the current changes, we saw a couple of base rate drops. First to 0.25%, which was back to its historic low, and then they took it to a new historic low of 0.1%. Has any of that filtered through to anything, or have people just been too busy dealing with all the rest of the changes?
So in the market, they have passed on, lenders have generally passed on the base rate cut on their variable rate. We've seen some lenders withdraw tracker products as a consequence, which again would have benefited from the rate cut. With fixed rate mortgages, we haven't seen huge changes. We've seen a couple of lenders reduce the cost of fixed rate mortgages slightly. I don't know if that's because lenders, with it being an emergency base rate cut, they don't know how long this is going to last. But we haven't seen a huge difference in fixed rate mortgages, and it's definitely helped those on variables and those on tracker rates. We haven't seen a huge difference in the fixed market.
Do you think that will filter through gradually, or do you think the lenders are just waiting to see how long everything lasts for the time being before they make any kind of decision on those?
I think with lenders focusing on service at the minute, I think that it might take a while to filter through if it does, because while they're taking measures to stem the flow of business in, I don't think they'll be keen on reducing fixed rates at the moment and attracting potentially more business. So I think there's a whole load of factors in play, and the cost of fixed money on the swap markets, service, and we'll see what happens. But I can't see potentially huge amounts of change in the immediate future.
Yeah, I think I saw a post somewhere that the one lender had increased their fixed rates since the base rate went down. I don't know if that was someone getting the wrong end of the stick or anything, or whether that did actually happen. I didn't look into the details. But.
No, I've seen some lenders increase fixed rates as well. I think that when you look across, it's easy to group lenders into one category, but they're lenders in very different situations. They have different funding requirements. There's different sizes. Your high street banks are very different to your specialist funders like Landbay, and they're all dealing with their own individual challenges. I think the high street banks have more government pressure to pass on these cuts to the public, and I think that's where, if you're going to see rate reductions, I think you'll see it in that area. So,
getting out your crystal ball, how long do you think the rates are going to stay low? You reckon it's going to be a few years before this unwinds? I mean, obviously, we've got to assume that the lockdown and the viral impact and stuff is probably going to last a few months. I think that's a fairly safe assumption. So then how long after that do you think before anything's safe enough to unroll the base rate changes?
I think it's difficult to say. I know this is kind of prediction you make, and then you look back on it and you find out you were completely wrong. But I think initially,
that's the way it goes. It's not a problem. It's assumed that'll be the case.
Yeah, absolutely. The only problem in my field is you have to be very careful about making these predictions, because people take it as advice, and
we should specifically say then this is very much not advice. I'm asking you to speculate wildly, and this should not be taken as recommendation.
I think interest rates are likely to stay low, and I think the big uncertainty, even in my own business, when you look to make a decision each day on matters, and the following day things have changed again, and you're dealing with a completely new set of circumstances and problem, or some good news, that has maybe come out. So I think that I worked through the recession in 2008, and in 2008 it was very clear what was happening. It was a liquidity issue. Lenders weren't just pulling loan to values or delaying valuations. There was lenders pulling out of the market, full stop, and you had more sense of what was going to occur moving forward. In this scenario, where you don't know how long lockdown will even last, it's very difficult to make any judgments in terms of being positive or negative. I think sometimes you just have to assume the worst and hope for the best. But it's very different to 2008, and it's even harder to make decisions because you don't know just how long this lockdown is going to last. And I would imagine a period of 3 months is going to cause a great deal of suffering in many areas. A situation where people are disrupted, the economy is disrupted for 6 months is going to be a huge disaster. It goes without saying, doesn't it? And right. I think that's the difficulty at the moment. I don't know what you guys think about that.
I think it looks like 3 months is the minimum, and like you say, it's essentially what the world, this country has been asked to do is put everything on hold for at least 12 weeks, and that is very hard, as you've rightly said, I think, to make any sort of forecasts or plan. But I think my mantra internally is exactly what you said. It's let's plan for the worst and hope for the best. But right now, when everything's on pause, it's not like you can plan for it. Like with a crash, when a crash happens, you kind of accept that you're at the bottom, and okay, how do we work our way out of this, and what do we do to rebuild ourselves and come out of it stronger? In this scenario, it's really, really hard to make those plans when we don't know how long we're going to be in it. I mean, hopefully, given what we're hearing, things will improve, but equally, how long will it take to get back to normal? So, yeah, I would just agree with kind of what you said.
Yes, yeah, and my understanding, we're in a recession, aren't we? But it's not a depression. I've been told that the recovery is going to be bell-shaped. So we'll reach the bottom, and then hopefully once the virus is contained, that line's been flattened, and hopefully we have a vaccine or a cure. I know these things don't take long. Then the recovery will be swift after that, and I think that's the difference between now and 2008. 2008 was a liquidity issue. Lenders was pulling out, the market was crashing, prices were dropping. Here it's a health issue, isn't it? And it's and it's a people problem as opposed to a liquidity issue in 2008 and a pure monetary problem, and that's where it's difficult to make predictions.
Yeah, I think it'll be. It is obviously a very different situation, and how it pans out will equally be quite different, I think. And I think this time around we've got a lot more that we as people and society and whatever can do to positively counter the cause, the problem. So there are people making positive changes towards working from home and changing their business models and things. And there are scientists who are working on vaccines and better tests and perhaps medication that may be able to help as well. So that there's lots of things that we can actively do, and hopefully some of the sort of business model changes and rethinking of how people approach life and work and commuting and all sorts of things. I hope some of that will sort of continue longer than the actual sort of crisis, so we can actually take positive learnings and lessons and improvements to the world out of it. So I think that could be a nice silver lining to it all in the medium to long term.
Yeah, and that's my hope. And rounding this off, hopefully with greater positivity, is a lot of us are able to use this time. And clearly, it will be a difficult time for many that are struggling, wondering how they're going to meet rent payments, mortgage payments, and the like. But also for me, and I know for some other businesses that I'm aware of, it's a time of where we can take stock, do those things that we should really be doing in terms of cash flow forecasting, rebudgeting, think about how we can operate more effectively as and when we come out of this period of time. And hopefully plan, my hope is to plan to create a better business than what it would have been. And I think, that can work on both a professional and personal levels. So I think, that's where I kind of come out. It's like, okay, let's try and use this period to improve where we can. And clearly there's going to be some more difficult times ahead, but how can we come out of them better? And that's kind of where I finish up.
How are you finding things in your business, Lee? So you're a team of 10 or perhaps more now. I'm not sure.
We're a team of 9, and we all work from home. So we have members of staff stretching from Worthing to Great Yarmouth, which is unusual spread, isn't it? But it's the way it occurred. So it's a lot of businesses have faced issues moving to working from home, but for us, there wasn't any disruption in that regard. The disruption to our business has purely been based on the market. And it's we've offered help to those that are looking to make that move to remote working during this time as to how they can get through it. And there's lots of different hacks, and there's lots of different ways that you can still work together as a team, even down to little things. We don't occasionally we won't send each other messages, but even just the use of voice notes instead of sending a message, where you can articulate more in a voice note, and you can read what they're saying better, can't you, than when it's written down, and especially when people are typing stuff out in a rush. So there's even little workings like that, like sending voice notes to each other as opposed to messages, which can go a long way. That's a small tip, but there's plenty of more things that we can do. And even as a business, the use of video technology, we've to have a client spend time out of their busy day before this to come into your office or for us to go out and travel to meet somebody and then come back, and you've lost that time in travel, whether they come to you or you come to them, where actually you could be working on the inquiry in that meantime. So we've often used Zoom and other video features to have meetings with clients, and you still retain that face-to-face element, which you see all of the videos at the minute, don't you, of companies moving meetings to Zoom now, and some of the funny clips that are out there that have occurred from that. But yeah, no, I think it's making people review the way they work. And as a business, for us, the remote working hasn't caused a problem, but it's purely just adjusting to those constant changes in the market at the moment.
Yeah, I think that's a lot of what I think might last after this, is people thinking about that commuting time and the time lost in travel a lot more, and realizing that there are alternatives and perhaps better ways to handle the process and save everyone time and save the environment as well. So all potentially good things.
It also makes you appreciate the importance of your network in times like this, and it shows you the importance of the people you know and staying in communication with them. So we spent a lot of time working with partners who introduce business to us, or we introduce business to them. And I spent 5 hours one day just calling them and saying, how are you finding it? What's your situation? How can we potentially help you in this scenario? And finding ways to work together. And I think during this period of time, you almost have to reevaluate your short-term goals. You're not going to hit those targets that you had in place. But if you can find a way to find a sustainable partnership that you can operate with somebody, and you can help them and they can help you, then I think that's the aim at the minute. So I think it's almost got you back to basics of saying, okay, who are the key people that we work with? Let's get on the phone to them. Let's speak to them. Let's find out where we can help them during this period. And likewise, they offer ways in which they can help you, because there are some businesses out there that are suffering. Estate agents are unable to carry out viewings. If you don't have a significant portion of your income from management fees, they're struggling at the minute. But there's other people who are busier than ever, because it just so happens that their line of work is needed at the minute. I know a broker who works on international mortgages for properties abroad, and he's busier than ever, because with interest rates so low on the continent, you can fix in for 20 years, 25 years. So people are taking this opportunity to fix their mortgages in while they're low. And he's looking for staff members to come and help him during this period. So you find out an awful lot just from picking up the phone and speaking to people, and it does take you back to basics again.
Yeah, I think it's very important to keep the lines of communication open, and to keep in contact and stay
connected. Stay connected.
That's the word, connected. Excellent. In these times where we have to be socially distanced and in sort of physical contact, at least we can stay in touch in other ways.
Indeed, and I think being connected is probably a good place for us to wrap it up. And having taken up a lot of your time, Lee, I think just behooves us just to say thank you once again for your time today.
Indeed, thank you.
It's been a pleasure. Thank you for having me.
And as per usual, please drop us a line if you've got any feedback on the show. If you want us to ask any specific questions with the people we've been speaking with, or if there's anything on your mind. And the show notes, as always, will be on thebusinessofproperty.com. Other than that, we'll see you on the next episode.